Jimmy,
Uriah,
dude, how are you?
I'm doing good, man. How are you?
Oh, dude, I'm getting
What the hell are you
I'm
wearing?
getting excited, baby. I'm getting it. Saturday's coming. Saturday's coming. Get that out of here. Ain't nobody want to see that.
Oh
Get
no.
that.
I know. Nobody likes God's team.
Okay.
I know, it's
We're the
football
belt
season.
buckle of the Bible Belt, though. So
Well, that belt buckle's been pretty weak lately.
nobody's got to talk about it. We recruited a lot. Okay?
No, you paid a lot, like all the other college
Oh,
did.
okay. All right.
Okay, so you want to hear a crazy thing?
Yeah, let's hear it.
LSU spent $20 million
20
on
million.
NIL.
And tell me about this young buck that just
Oh,
got
from
12
Michigan.
million.
Yeah, so he was, I think, the top-rated dual threat quarterback in the country coming into this year. He's a freshman.
So he got an arm, but he can run.
Yeah.
Okay.
And they say he is like way beyond his years maturity, right?
And who got this guy?
Michigan did.
Michigan. Okay.
So I was I was watching on Sports Center, and he signed a NIL deal with his, name and likeness
Right.
for $12 million. And he just turned 18.
Walking out of high school, getting a $12 million check.
But you know what, though, man?
Shit.
The NCAA, EA Sports, and all those guys did this. They built this.
Yeah.
Right?
They've been working on this. This has been talked about for years. It's just now showing up.
Yeah.
That's what it is.
And so, now everybody wants to put like these parameters on it, but man, the horse has left the barn.
Yeah.
It's crazy. I just hope, like I always hope, is that I don't care if these kids make money. I really don't, right? Because they're doing whatever. That school's making a lot of money because if they win or not, right?
Right.
I just hope that somebody is overseeing it so these kids are protected financially, even if they don't make the pros. This kid's set up for life.
Yeah.
He really is.
Yeah.
And I just hope somebody has some reins on him and say, no, we're not going to spend it on a $70,000 Bentley, right? You're going to get a Toyota 4-door Corolla.
Yeah. But come on, Jimmy. I want to drive the Lambo, and I want to, look all flashy and buy $1 million worth of jewelry.
Okay, so who's the quarterback for the Philadelphia Eagles? You should know him.
Yeah,
he was one of your boys.
Hurts. Yeah.
You know that he rents a house?
Yeah.
Drives a regular car.
It's awesome.
Yeah.
That's the way it should be, I feel.
Yeah.
Like you're smart if you do stuff like that. When you're flexing on everybody, your money goes right down the drain. And that's a lot of these pros, they hit it big. They had a lot of money and now they're bumming it.
Yeah. Some are broke. Some are broke.
They're having a tough time. And so you got to be smart. Right?
Yeah. And I just hope that these schools, set things up right for these kids, right? That's all I hope for. I'm happy for him.
Yeah.
I really am.
Yeah.
Even though he plays for Michigan, sorry, Michigan fans, but I'm a Notre Dame guy, so Devil School, Michigan. I didn't say that. So anyway, today I want to talk about something that our people may find boring.
Yeah.
But it's so important.
Well, I got some questions for you.
Okay. So we're going to talk about the Federal Reserve.
Yeah.
So when everybody thinks about the Federal Reserve, they think about, okay, what the heck do they do?
Yeah.
Well, they were established in 1913.
Okay.
And they were set up to have a strong financial economy, right? Overseeing all these actors in the finance community, money supply, all that stuff. So their role is very huge. And what's really cool about them is that they are independent from who's in office. So they don't give a crap if it's a Republican or a Democrat in office. All they care about is what is the economy doing? What is employment doing? What is this doing? And the president could be barking like he is right now, right? And you don't want some guy that's going to be for 4 years to start dictating monetary policy that could last for years. So that's what's really cool about him. And it's people love him or hate him. Like these guys are never going to make the right decision all the time.
Yeah.
Right? Because everything is numbers. And you hear stuff that, they play from old numbers. That's true because they still have to predict the future. So the Federal Reserve is one of these things that is so big and it's so important, way beyond interest rates.
Yeah. I was thinking like this is so much bigger. Like it affects mortgages, it affects the housing supply, it
Employment,
affects employment, but also just like around mortgages, right? Like the rate
right,
is strongly dictated by what they say and what they don't say.
right. So
Yeah,
that's what we're going in right now, right? Because we've been fighting inflation.
right.
So Powell, and this is before they make their announcement. We're doing this before he makes a September announcement. Um, they're still, do we do inflation? You know, is inflation still going to come into play? And because I think people have also gotten used to high prices,
Mm-hmm.
you know, and which is sad.
Mm-hmm.
So you have the president barking that I want rates lowered. I want rates lowered. And sometimes when you lower rates quickly, inflation gets worse,
Mm-hmm.
right?
Yeah.
So there's a balance there. And I think, you know, I think Powell's doing the best he can,
Mm-hmm.
you know, and because he's the one that came out of COVID, right? He's the one that got us through COVID and stuff. So I think that to understand when you are looking at a credit card or a car loan payment or
Mm-hmm.
excuse me, a car loan or something like that, the feds have a direct impact on the interest rate.
Mm-hmm.
And another thing to do, if you want to know kind of what the interest rate is doing, watch the 10-year bond yield.
So tell me about that. I mean, I've heard people talk about this 10-year bond. What is that? How does that affect?
Because the interest rates will track that, right?
Okay.
Because that's one thing that the feds look at is what is a 10-year bond yield doing?
So that's kind of like the leader in the
Right,
market.
right.
Okay.
That's kind of like okay, if it's doing this, and now not every day it's going to be that, but it's a general great indicator of what the interest rates are going to do.
And so if I wanted to see what that was doing, I just Google 10-year bond yield
Yeah, to
and
do that.
it'll pop up and I'm
Right,
gonna see a whole bunch of bull honky, but
right.
ultimately I'll find a graph that shows
That
me what it's
shows what
doing.
it's doing.
Okay. And
Now, also with uh the Federal Reserve is that they're also responsible for what banks do and financial services do. So they oversee them. And what it is they control how much money is put into the economy and how
mm,
much is taken out,
mm.
right? Because you don't want too much, you don't want too little. So it's always this, they're always trying to balance what is the best money supply we have out there for today.
Mm,
And so banks actually borrow their money from the Federal Reserve,
mm.
right?
And so that would dictate mortgages, right?
Yes. Yes.
That's where it comes into play. And that 10-year bond yield will move and rates will track that.
Right.
Mortgage rates will
Yeah.
track that.
To keep it very simple, yeah,
Yeah.
it kind of does that.
How do feds make decisions to affect like long-term plays like that?
The feds will look at a bunch of different indicators. For instance, like I just left my mind. Consumer index.
Uh-huh.
You know, how are people feeling about the economy? They will look at inflation. They will look at unemployment rate. They will look at how much, not only unemployment rate, but how many um, new things are people applying for unemployment?
Uh-huh.
Is that growing or is that lessening?
Right.
So they take all these numbers and then they look at the historical data too, right? But these are kind of numbers that they get once a week or once a month or whatever. And then they look at the trend that's coming from the past.
So what is that trend right now, and what does it mean for like first-time home buyers versus seasoned home buyers? Like, where are we heading, and what does it mean?
And that's $1 million question because there's a lot of people on one side of the aisle that say we need to lower rates, basically get more money into the economy, blah, 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 blah. And you got the other side saying, no, we're not ready there yet because we don't want inflation to go through the roof,
Mm-hmm.
right? So I think what Powell has done the last two or three meetings is kind of kept things steady,
Mm-hmm.
right? Because he doesn't want, because this economy is still very
Delicate.
delicate. Thank you. That's a great word.
Yeah.
That's a great word. And so he doesn't want to do anything that's going to do lasting damage for years.
Mm-hmm. So he's like, everybody, hey, just calm down. Just calm down. Let's sit here for a second.
Yeah.
Let's sit here for a second.
And then the Federal Reserve, they have members.
Yeah.
Right? So I think it's eight people in there. I'm not sure. I got to check that out. But anyway, so there's members. So General Powell doesn't make
all the decisions.
All the decisions. No, it's from other Federal Reserve banks within the United States. Like there's one in Austin, I believe. And what they do is they take a look and then they discuss what they think we ought to do.
So what does it mean for the buyers, right? Like the seasoned buyers, the first time, like right now rates are sitting what? Like
6.5.
6.5.
Around, yeah, that conventional, that's your average cross country.
And so this is probably the new normal, right? Wouldn't you say? Like it's probably like where we're gonna be for a little.
Well, see, and here we go again, right?
Sorry, I'm not calling you out.
Yeah. I might get fired from my non-paying Federal Reserve job.
It's so used to it.
It's just like, I think what it is the fact that we don't know if it's going to be a 6.5 from now on. This is what we hear. This is what I was hearing prior. 3 rate cuts this year and 2 beginning of the first quarter next year. How likely is that? Who the hell knows? Because it can change. They could announce today and change tomorrow. We're thinking that they're going to rest between 5 and 6. That's where we think. And if you think about it, that's really good because the average the historical average is around 7.
Right. So, I mean, even right now, like on the entire average of things, like if you zoom out and you look at the graphs, we're still doing all right. Like this is not bad rates. It's just because we have bad rates and inflation, I think it's causing a lot of people to be like, look, I can't even afford eggs at the store. How the heck am I going to afford this mortgage,
And then, with all those, everybody, when we were in COVID and they dropped the rates and everybody enjoyed that because credit cards got cheaper, right? So everybody's on this crack rate, that they think that's where they should be. No. The reason they put so much money was to stimulate the economy because COVID was shutting things down.
Yeah.
Right?
Yeah.
And when you lower the rates, you throw more money in there to get the economy going.
Yeah.
So people got used to this. And so, and part of the issue, we'll go into another part of this a little bit later on the housing side. But yeah, so these 2.5%, 3.5% interest rates, you don't see those again.
Yeah. That was really just like you said, a stimulant.
It was just a bleep on the radar.
Yeah. So if you locked in at that price, you better stay there. You better not give that rate.
Well, here's the
thing. You're like, shut up, Uriah.
We always encourage that if our clients are happy with that, great, stay there.
Yeah.
If they want to move, then we'll talk, right? And this is what to expect.
Yeah.
If you want to redo your house, right?
Cash out refi,
your rate's going to be higher, but
you got cash in hand.
And also, and this is the thing with the cash out refi, your 3 and 3.5, that's gone.
Yeah.
Now you're at that new rate, but you've made your home better.
Right.
So a lot of times it may not make sense to stay at that low rate. One, you might have to move.
Right.
Right. Second one, you might want to do some stuff to your house. And if you're sitting at 7.5 to redo the house, that's fine because if rates go down, then you just refi later.
Yeah.
Right?
I think about like a marathon or cycling thing, right? They have those tents set up.
Right.
So you can stop off and refill and get some protein in your body and stuff like that. That's kind of what this rate dropping down to like 2.5%, 3% was.
Right.
It's more of just like let me catch my breath, let me get some nutrients in my body, and now I'm back at it. And you're gonna want to do things. You're gonna want to have experiences. Maybe you want to go on vacation or something like that. You need a little bit of cash to do it.
Right.
You can cash out refi. You're gonna get a higher rate, but you're gonna get cash in hand to be able to do what you want to do.
But see, that's what we're also looking at too. Is maybe you don't refi that.
Right.
Maybe if you want to do a little, take a HELOC. right?
Yeah,
Home equity line of
so
credit.
yeah, so I've talked to some people about home equity line of credit. Can you dive into that just a little bit to
Yeah.
let people know like what is a HELOC? I mean, home equity line of credit, right? But what does that process look like? How am I actually getting the money?
So what you're doing, it's the same thing. You're taking equity out of your home, but instead of it being a first mortgage, which is your primary mortgage, right? Because if you let's say you have a first, second, and third mortgage, the first gets paid off first, the second, blah blah blah. So a HELOC, the home equity line of credit, is the second mortgage, right?
Mm-hmm.
So it's going to have its own interest rate. It's going to have its own payment, right?
Mm-hmm.
But it doesn't affect the interest rate on your first mortgage.
Okay.
So you can do it two ways. You can have an interest only, where you just pay interest, and maybe you're getting ready to receive a bunch of cash,
Mm-hmm.
but you want to do this to your home now.
Mm-hmm.
Interest only, then you pay it off, or you can do payments on it,
Mm-hmm.
like monthly payments. And sometimes the HELOC works better than refinancing your own home, because maybe you just want to do I want to put a small deck. It's costing me like 10 or 15 grand,
Mm-hmm.
but I still owe $300,000 on my home. You want to take
You want to give up your rate just for $14,000?
Exactly.
Yeah. Yeah, I see. That's good.
And that's what, when I'm with my clients, that's what we do.
Yeah.
I find out, okay, what are you doing?
Yeah.
Well, Jimmy, we're going to do a major renovation. Well, then, yeah, we probably need to refi that.
Yeah.
But if we're just doing some backyard stuff, let's get a HELOC,
Mm-hmm.
right?
Yeah.
And let's do it that way.
Yeah.
So sometimes, we have a bunch of different tools
Mm-hmm.
that people are so used to hearing about refinancing and the purchasing and the refinancing, because sometimes it means just the HELOC,
Mm-hmm.
not the whole yard. So that's one thing to consider when we're looking at this stuff.
Awesome. Well, I want to get back to this for a little bit.
Oh, yeah.
I want to talk a little bit about this.
Dude, you know what? I feel sorry for you when Texas gets a hold of you guys.
Bro, not this year. Not this year.
Yeah.
No, not this year.
Yeah.
No, not this year. Okay, so why are you a Notre Dame fan? I gotta know.
So when I was a kid, I watched Notre Dame in Texas. Was it Texas? I think it was. Because my dad's a big Texas fan. And I just liked him.
Mm-hmm.
I liked the coach, and I've always followed them,
Mm-hmm.
And I said I was never, ever smart enough to get into Notre Dame, right? Even though I was Catholic, I thought that'd be me a little juice, but apparently there's a lot of Catholics that go to Notre Dame, so much for the juice without the GPA. And I've always watched them. I like the fact that they're independent.
Mm-hmm.
I like the fact that they are education first.
Mm-hmm.
And a lot of colleges say that, I know, but
Yeah.
I just think that when you look at graduation rates and things like that, and the fact that I get to watch them every Saturday on NBC.
Yeah.
They have their own channel.
Yeah.
So, but that may be going away too. You never know. But
No.
but no, I've always just been a fan of them. I followed them and just loved the fact that being an independent,
Mm-hmm.
they have to play. Usually 80% of their games have to be against tough people.
Yeah.
And this was before the college playoff,
Yeah.
So they were never a conference champion.
Yeah. While like teams like us, we get a couple gimmies.
Right. And you guys are a conference champion.
Right. But like we get some teams that we play that are, lightweight, as they say, right?
Yeah.
And then they're still like, we're gonna play Michigan this year.
Yeah.
So we'll see what homeboy's all about.
Notre Dame lost to their lightweight last year, Northern Illinois.
Yeah. Yeah.
But see, I think going into the college playoffs this past year, even if Notre Dame was number one, undefeated in the country, the best spot they could do was fifth in the college playoffs because they're not a conference champion.
Right.
So, and we saw what happened to the conference champions last year. Every one of them got beat in the second round.
It was an upset season last year.
And there's people now. We have 12 teams. We had 12 teams last year, right?
Everybody's getting some weight to carry now.
Yeah.
Yeah, that's good. So, okay, wild predictions for this season. Wild predictions, maybe even looking as far as playoffs and championships. Like, what do you got?
Okay, so a lot of this is going to be like every football. I don't care whether it's pro or college or high school. It all goes down to quarterback.
Mm-hmm.
We have a bunch of programs with first-year quarterbacks.
Mm-hmm.
Texas,
Mm-hmm.
Ohio State, Notre Dame,
This is when you get your cover.
Michigan.
This is when you get your cover on NCAA football 27.
Yeah.
So you boys better show up. You know?
Yeah, you gotta, and that's it.
Yeah.
We don't know. Like Notre Dame is going, they're playing Miami, and Miami has a quarterback from Georgia last year. He got hurt, and Notre Dame's, rated higher than they are, but you don't know because we got a red shirt sophomore starting.
Yeah.
He could be great in 3 months from now,
Right.
but he's going to Miami to play it, and Texas, same thing. They're going to Ohio State, and Arch Manning is one of the best.
Mm-hmm.
But we're going to see he's still young.
Yeah.
But Ohio State, they have a new quarterback.
Mm-hmm.
So it's going to be crazy.
It's gonna be a wild card for sure this year. So on this note of sports, and you're kind of saying it right now. We got a lot of young bucks
Right.
in play right now, and there's something to discipline and patience with these young bucks. Like, these are core years that they're building their disciplines, and the coach and the players have to have an inkling of patience there.
Well, let's put this in perspective for a minute.
Yeah.
When we are watching college football, and we're watching that 18-year-old Michigan quarterback,
Mm-hmm.
our first thought is that he's not 18.
Right.
Our thought is he's a Michigan starting quarterback for Michigan.
Mm-hmm.
So, and when I lived in Omaha, we went to College World Series.
Mm-hmm.
And my boss's buddy, his son, was a pitcher for Fresno State the year they won it. So after the game, we went down to meet the team. And you see these kids on the field, they got the black under their eye and the blah, 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 and they come out of the locker room and they are just freaking kids.
Mm-hmm.
And to me, that opened up everything. When people will just yell at college players, they're yelling at 18, 19-year-olds. How the hell were you at 18 and 19?
Crazy.
And these guys are in front of 60, 70,000 people.
Yeah.
And the kid drops a ball.
Yeah.
It's like, I mean, everybody's just saying, oh.
Yeah.
But I hear some people, like, if I go watch the game in a bar, and they are pissed.
Yeah.
And I'm thinking, dude, man.
Yeah.
These are kids.
Yeah.
These are just young men.
Uh-huh. Yeah.
So patience as a fan, right? You're right. Patience as a coach, as coaches do. Because these kids are going to make mistakes. But let's turn this route right back around to mortgages.
Yeah.
Patience as a home buyer.
Yeah, dude.
Patience, because you have to have a lot of things in place. You just go out there and buy a home, right? But you have to have the discipline and the patience to build that down payment, to build that stuff, right? And with all the talk of rates and stuff, I had one customer yesterday, and she was ready to rock and roll. And I said, okay, we'll talk about first-time home buyer programs later on in another episode. But I said, I think you're going to fit in this program. She goes, and I said, but I just want to get you to see if you qualify, because she had some issues with her credit, and she qualified. But I said, you're not going to do anything today because you don't have enough money for your closing cost. She goes, I know. I said, that's fine. I go, the good news is that you qualified. Keep doing what you're doing. I said, well, this is what I want you to do now. You're looking at about a $1,700 a month payment. We can't do anything until like October, November, somewhere in there. I said, from yesterday to now, you're paying rent of $1,600 to your savings account. One, you get used to paying it. And two, you'll have your down payment ready to roll.
Yeah.
And that's discipline for her to do that.
Right.
Right.
Yeah. And that's that's a long-term strategy play.
Yeah.
You know, you talk about the importance of long-term strategy. You know, a lot of the older generation are able to retire because of the choices they made when they were my age.
Right.
Like being able to think that far down the road about your family. Like I have two girls, they're going to probably go to college. I hope not, but they do, right? And I'm going to have to help with that. You know,
Right.
they're going to need cars. There's
Yep.
going to be things that happen through life, you know, and like being able to plan that far ahead seems like for at least my generation, and a lot of my generation is still sitting on the fence. They haven't even got into real estate yet.
Right.
Right. And so like thinking like that for them, whole nother ballgame.
Well, I think, and like when my parents were raising kids, right? It didn't cost nothing like it does now.
Right.
Right. I
Yeah.
mean, my parents were middle class, had 2 cars, had a house payment, the kids, so on and so forth, but they also had pensions.
Mm-hmm.
Right. So they weren't putting money in a 401k. So in a lot of ways, it's a lot different for my generation on when we lost the pensions and now we have to invest for, because look at it. Now you're taking away 6% of your income to throw into your retirement.
Yeah.
Right. And yeah, the company will match you if you put in your full blah, blah, blah.
If you're with a company.
Right.
And so then you got my generation that's over here like doing it all on their own. They're not working for people. They're self-employed like crazy. Like entrepreneurship journey is like increased by like something like stupid like 30% or something like that. And so,
but that's a good thing because that tells you what's going on in the private business part of it, right?
Yeah.
Because your generation, and this happened with COVID, your generation basically said, bullshit, we're not going to go into an office.
Nah.
You know?
We don't need to. We proved that it worked. So why should we, you know?
And now companies have tried to bring them back full-time in the office, which I understand why, but I think there's a hybrid approach that is much better.
And some companies
are do that because they were losing people if they didn't have a hybrid program.
The pool went way down whenever they said you have to be in office. You know, they'd get in interviews and stuff like that, and people were like, "Oh, that's not really what I'm looking for. Peace out." You know?
Yeah, I think too, though, that my generation was about things. You know, the '80s, the '90s. It was about get as much as you can, right? And I think like my kids, they're more of what can we do, right?
The experience
over the stuff. And man, I fully support that.
Yeah.
I'm saying absolutely.
Yeah.
That should be that, because you're going to work all your life unless you become 99% of us are going to work all our life.
Yeah.
So why not sprinkle in there stuff that fun? Do you need a 5,000 square foot home for you and your 2 kids? No. Won't your kids be happy if you had like a 2,500 square foot home, and then you guys go on vacations every year and enjoy each other?
Yeah.
See, man, when I was working, it was all about work.
Yeah.
All about work. My wife and my kids took vacations without me.
Yeah.
Because I thought I was so important. I had to work, which was a bunch of crap anyway.
That's a whole nother.
And, and so I just think that we try to compare, and you really can't, because there's too many things that are different back then than they are now.
Yeah.
I think what we're going to see is, we're going to see kids, young adults, I should say. I don't know if they're going to buy that big house. I think they want an affordable house, and that's what we're missing.
Yeah.
Affordable housing. Everybody thinks affordable housing is for the poor. It's not.
Right.
It's about everybody. It's about middle class. It's even people that have money. You know, maybe they want to buy a $200,000 home, right? So when we talk about affordable housing, I hate when they tag that like it's only for the poor. It's for everybody.
Yeah.
And so when we're talking, so that leads me to the housing, right? God, we're just flowing today.
Yeah.
I must have slept last night. So what I've heard on the housing is that I think it was in here where we're still like 30 days things staying on the market, which is good. And I read where 31% of so far the home purchases this year have been with cash. 28% have been first-time home buyers, which is a good number.
Mm-hmm.
So they're jumping into it, which is good. And so we're hearing that the prices are going to keep increasing for about the next 4 or 5 years, and then hopefully become steady. What we're lacking is basically homes in general and affordable homes.
Mm-hmm.
That's what's driving this,
Mm-hmm.
right? Supply and demand.
Mm-hmm.
Less supply, you have a higher demand, drives the prices
Either
up.
that or the supply is already outlandish. They're custom homes. They're, way out of the bracket for the majority to afford. And so, which leaves them to be like, well, there's no supply for us in
Right.
this bracket. Right.
And even as a home builder,
Mm-hmm.
you can focus on one home,
Right.
right? Do, $4 or $5, $6 million homes a year, and you're pretty good.
Mm-hmm.
But I think there's got to be something that and this has been going on for a while now, is that the affordable housing in this country is at a
All-time low. I know there's programs and projects that are going on to create more of that, especially here in Colorado Springs.
right.
But is it going to be enough? Probably not.
Oh, we're years behind.
Yeah.
We're not going to fix this in 1 or 2 years,
Yeah.
maybe not in 5 years.
And you talk about patience, right? You talk
Right.
about the patience journey, and a lot of people think that they've got to get the home of their dreams first and foremost, and it's not that way. You got to be patient with it. You get your starter home, you start there, you maybe spruce it up a little bit, you're building equity, and then you go into more of like a middle, something, and it's patience. It's a process.
And and who says your starter home can't be a forever home?
Why not?
I mean, if you get a good rate on it, and
Mm-hmm.
it fits you, because sometimes I think it's all about because I lived in a big home also,
Mm-hmm.
right? When I was married, and it was a beautiful home. Hell, to clean it and stuff.
Yeah.
I mean,
Well, and the keeping up with the Joneses mentality.
well, the kids were one part of the house, I was in another part, that wife for the other part. It's just like, and so sometimes I think that if we would just and I looking back now, I kind of wish I would have done that and stayed in that very first home in Omaha.
Yeah.
And just socked money away.
Yeah.
Instead of buying a new home and all that stuff.
Yeah.
But
yeah.
that's just me.
Sure.
But no, so we're that's what we're seeing on the housing side. There's still activity, which is good.
Yeah.
But I was really excited about the 28% of new first-time home buyers.
Mm-hmm. Coming to the table.
Yeah, and a first-time home buyer is basically somebody that hasn't bought a house in the last 3 years.
Right.
So they could be returning. Maybe they sold their home and I would return as a first-time home buyer.
Yeah.
Because I sold my home. So I think there's a lot of good things going on. I just think that we have to find out what's going on with Powell.
Mm-hmm.
And then what we see with inflation and those other things, but it's all good.
Yeah. So let's talk a little bit about the current market then. So we touched on it a little bit.
Yeah.
What's the rate like right now?
So I got a thing called mortgage news or something like that. And it popped in today where they just go average across the United States. And it was the Fed rate, I think, was at 6.5.
Mm-hmm.
Right. And which is good because we were at 7 last month.
Mm-hmm.
So it slowly ticked down 0.5 point.
Yeah.
So, like I said, it may hover around there if nothing happens in Wyoming with Chairman Powell. If he announces that we're going to cut rates, then Katie, get ready.
Yeah.
Because people are going to be active.
Downshift.
Right. So if you have questions, contact me and let's talk about what you want to do.
How do they get a hold of you again?
At jimmy@indigomortgage.net.
Okay.
Or my cell phone at 719-437-5151. And like I said, I'm not a pressure guy. I'd rather walk through the steps. And if that means that we have to plan something and take action the next year, that's what we'll do. Because like I told my first-time home buyer yesterday, I'm going to call you in about 2 or 3 weeks and see how you're doing.
Mm-hmm.
Make sure we're staying on our plan. And that's what we do.
Mm-hmm.
So it's all about what my clients' plans and what they want to do.
That's awesome. Well, Jimmy, it's been good, man.
Uriah.
Always good.
Who is OU playing? Like the Minnesota School of the Blind?
We put simmer down. We're playing Iowa State, I think, or Illinois State. Illinois State. Yeah, we got a good team up front.
Wow, Illinois State. Yeah. That's gonna be close.
Who are you playing first?
Miami.
Oh, okay.
Yeah. At Miami.
Better hope your boys are doing push-ups.
Oh, our boys are ready. They're biting at the bit, especially Miami.
Yeah.
So there's a thing on ESPN. It was what's their show called? 30 for 30.
Yeah.
It said Catholics versus convicts, and they talk about the Miami and the Notre Dame rivalry.
Man, and what a title.
Yeah. And it's not by a Notre Dame fan or a Miami fan. It's just some guy that just thought, because it's such a great rivalry. It'll be fun.
Yeah. Well, thank you so much for listening.
Thanks,
give Jimmy a follow, subscribe to the content, and drop comments in.
Yes,
Love
please.
To talk
and like I said, give me a holler. Let me help you as much as I can. That's why we're here for, is to help you. Thank you.